you need a good attorney, you need a good CPA, and I think you need a good banker. I encourage folks, as you're kind of navigating through your portfolio, either bringing properties on, looking at, your kind of maturities and where they're lining up and kind of the future. I really think, folks need to either have a really strong relationship with their banker or work to develop it. The ones that did really well were the guys that had really strong relationships. And so I encourage all REI members, develop a good relationship with your banker. Learn how they think. They can help learn how you think, and you have a much better cohesive relationship. It should help the most people.
Thanks for joining us on another REI-NWA podcast. My name is Coley Bailey, and I'm your host, and I'm also a principal broker at Lone Rock Realty. And today, this is episode 50, and we're going to be talking about adjustable rate mortgages with Andrew Brink.
How's it going, man?
Man, I'm glad to have you on.
I appreciate that.
So you are the market president for the NWA Armor Bank, right? Tell us a little bit about who you are, where you're from, and how you got to be doing that particular amazing job.
Well, first, I'm very thankful to be here on the 50th episode because, funny story, grew up in Elkins and my football number was 50 my entire career. So divine intervention, whatever. But grew up in Elkins, went to Elkins High School, go Elks. And I think they're number one in the state right now. So, I wear that badge pretty proud. So grew up there, went to the U of A, started my banking career down in Birmingham with Regions Bank. And then they moved me to Little Rock. Worked in Little Rock for 2 years as a commercial and industrial underwriter. So I did the biggest companies in Arkansas, underwriting them. And then got the opportunity to move up here. They're back home in 2016. Worked for a local bank. Worked there for a while. And then I joined Armor in May of 23. So at that time, we were basically sticks in the air at our location at 52nd and Horse Barn. Started that. We started with a small team and kind of grown that from there. Started loan portfolio, good deposit customers, and really just trying to build a brand and a tangible franchise that we can grow and look up in 50 years and think, man, we really have something special up here. And I think we're well on our way. Just happy to be along for the ride.
Yeah, and so you're mostly doing commercial loans right now. Is that?
That's right. We have a consumer product and team that come along with it. But my role specifically is along with the commercial clients that we have up here.
Yeah, and so we were talking a little bit earlier. So, and just so the listeners know too, you're doing some new construction loans. You're doing, like you said, a little bit of fix and flips, not a ton of that, but what are some of the other?
I cut my teeth. I mentioned the commercial and industrial, so that gave me a good background of how to underwrite, businesses. When I moved up here, it's not an unknown thing that most opportunities up here come with real estate. So I really cut my teeth with land development, home construction, and anything that has to do with real estate. The idea being that, you can touch it, you can feel it, you can look at it. And I just kind of developed a little niche in kind of that arena.
Yeah. Okay, great. So, let's talk about what's coming up in this program. We're going to be talking about adjustable rate mortgages, what they are, how they work, when to use them, when not to use them, things like that. And this is going to be at our main meeting. So you'll be there. It'll also be, we'll also have Sam Harris at Armstrong Bank, which Armor and Armstrong, I got a little bit,
plenty of A's.
Tongue-tied earlier. But so, and Sam Harris has been a good speaker. He's done a lot of programs with us in the past as well. So as we're filming this, we're a day out from the Fed's decision.
About 24 hours.
Yeah. So the Fed's got a meeting coming up, and they're going to be announcing what everybody thinks is going to be a rate cut. Could be a quarter point, could be half. We don't know. A lot of speculation on what it's going to go there. What do you? And by the time this comes out, everybody that's watching, this will be past this point. But
Oh, you're painting me into a corner.
What are you thinking?
You paint me into a corner. I think the market has kind of proven that we all suspect a rate cut is coming. I think that rhetoric is out there, and if it doesn't happen, I think that's worse for the market than an actual rate cut. If I had to be, rubbing my crystal ball here, I would take the easy out and say, we get 25 basis points. I think it aligns with kind of where we're at from the, the labor side of things and also GDP. If I had to give a 75% confidence level, it'd be that we're going to get 25 basis points. And then I would say a 20% confidence level that we have 50 basis points. Any more than that, that's an outside shot. Yeah. I think that sends tremors through the market. And I think that's kind of where we land. We'll know by the time that I'm there at the main meeting. So, hopefully I'm right.
Let's talk about what kind of effect this might have for adjustable rate mortgages. How much does that actually fluctuate throughout the adjustable rate?
Yeah, so it really depends on two things. One, I think a majority of the bank's book portfolio in Northwest Arkansas and really across the states, we're going to be 5-year terms, and a majority of that was put on in 2020 and 2021. Mm-hmm. So if you have a property in place now, I suspect that you're really not going to be calling your banker immediately and saying, hey, man, I need to take my fixed rate and move it around. Now, if you had a floating rate, obviously it's going to be accretive to your cash flow, depending upon the loan structure, because some loans are structured with daily adjustments, monthly adjustments, quarterly adjustments, or annual adjustments. And that's all dependent upon the borrower and what the bank negotiated. So, it really depends on what they have. Obviously, as rates go down, you should see a freeing up of cash flow, hopefully, showing some, net profit to investors. Obviously, there's a ton going on with the market with the cost of insurance and non-renewals. And also there's, readjustments with property valuation. So your property taxes may go up and probably have gone up. Mm-hmm. But hopefully that little cut there is accretive to the overall market, and we can see a little bit of expansion.
Yeah. Do you think that would be an opportunity for some refinances to happen, or do you think people should hold off for future cuts?
Again, I think depending upon the loan term, there's
and it wouldn't make sense anyway unless somebody had gotten a loan in the last 2 years.
Yeah.
Since rates went up to begin with. But yeah.
Yeah. It's going to be dependent on loan terms. The old rule of thumb is, don't refinance unless it's, you can save 100 basis points or 1%. So if you're at 25 or 50 basis points, I don't know that you're there yet.
Right.
But additionally, I think there's, more to come as the Fed tries to create this soft landing that may or may not happen, but I think they're all working towards their dual mandate to make a soft landing happen. Yeah. So, again, if I were painted into a corner, I would probably say it's probably not enough at this point.
Yeah.
Sit tight. If your situation dictates, maybe you need to, maybe you've got an upcoming maturity, or you have a project that you've owned for a while, then maybe discuss it and talk to your banker.
Yeah. Well, let's talk about the dual mandate a little bit.
Yeah.
Right. So on inflation on one side and jobs on the other side.
Mm-hmm.
Right. So are we seeing that this upcoming hopeful reduction is because they're seeing the CPI come down enough to justify it, and the jobs numbers are getting worse?
I think it's probably, based on the based on the releases from the Fed, I think it's more with the labor side.
Yeah.
I think there's some tightness that's kind of creeping in. And that's good. That's what's driving most of their conversation. CPI has been declining for a while. Mm-hmm. I was driving down here. I have a diesel truck. Diesel price has been going down, not a ton, but have come down. I think you still back out some of the basket. I think CPI is definitely coming down. Mm-hmm. There's just some labor concerns that they may have.
Yeah. All right. So as economic conditions shift and interest rates might shift, things like that, how do you think investors can best navigate that, especially when it comes to the lending side?
Yeah, I think, again, bringing it back to kind of history, I think, you need a good attorney, you need a good CPA, and I think you need a good banker. And so, I encourage folks, as you're kind of navigating through your portfolio, either bringing properties on, looking at, your kind of maturities and where they're lining up and kind of the future. I really think, folks need to either have a really strong relationship with their banker or work to develop it. And working to develop it is not, hey, I need to bring you a deal, I need to bring you a deal, I need to bring you a deal. We all like deals. We all like talking about, things that are going on with your properties or your portfolio. But it could be as simple as, hey, and it goes both ways, but let's go grab coffee. I literally just want to, see how things are going.
Yeah.
It's great that you have, 10 duplexes now, or man, you started off with one and now you have 10, or I'm trimming back going forward, whatever. It's just a conversation. And I think, I suspect that at some point there's going to be a finality to this cycle, and that's going to bring pain or blood in the streets, as the term. And the people that worked best through the last time, I think we were all younger at that point, but we also remember how bad things were in the past. The ones that did really well were the guys that had really strong relationships. And so I encourage all REI members, develop a good relationship with your banker. Learn how they think. They can help learn how you think, and you have a much better cohesive relationship. And so I think that's what all of us are doing up here, and it should help the most people.
Yeah. All right. Well, awesome, man. Thanks for this.
Thanks for having me, Coley.
Yeah, absolutely. So, guys, you got to come to our main meeting. This is going to be on October 8th, 2024 at the Hyatt House in Rogers, 5:30. Doors will open. We'll get started with Andrew and with Sam Harris at about 6 o'clock. We'll get started, and then we'll have Q&A, and we'll mix and mingle after that, and get to know everybody, the good networking, magic that happens at the REI meetings. Once again, $0 at the door if you're a member. If you're not, it's just $20. Come join us. Well, thanks for joining us on this particular 50th podcast, and we'll catch you on 51.